Hello, today is the 21st of October, 2023. As always, we'll start with our disclaimer. We'll go over our calls and we'll make some predictions. It's my trading plan for Monday, which is October 23rd, 2023. Remember, I can be completely wrong. In all trades, be made at your own risk. I know people skip over the things here, but I want to stress that predictions for longer-term moves are not based on the MEJT system. MEJT system is a highly reliable system for predicting intraday moves. My calls for longer-term moves aren't based on the system, and they're not as accurate. I'm going to do as good a job as I can, but although my calls for these MEJT targets are going to work well over 99.5% of the time, I can't say that thing about my longer-term predictions. They have different indicators. We'll look for the pattern with the early low, which is this, and Monday should also have the early low. We had a great setup for a bottom here. I said after Thursday's close, futures were down about 10 handles, that if we could recover those 10 handles and hold this low, we had all we needed for a good rally. Well, we never recovered it. We never hold this low, so right from the open that idea was killed and there was no call. This is just a reminder of what we said. We also said in terms of time we shouldn't be too far from starting a rally because there are too many puts being purchased and the VIX is too high. That doesn't mean we couldn't have a drop like Fridays, and doesn't mean you won't have a drop Monday. It's not a pinpoint indicator. Well, during the day, MEJT said this rally wasn't a real thing, that it would retrace. So this drop was false. We've already retraced. So it's not saying anything else. This is pretty much an all-day decline, and the one thing which makes it a bit suspect is the time of the late break to new lows. We were holding above these early lows for most of the day, and then with under a half an hour to trade, we had this drop. I can't call it a wall, there's too much fiddling around here, but this drop in the last half hour of the day does not come at a time when big money is going to be selling stock, because there's no liquidity enough for them to unload their positions. Now, what counts isn't this low, but this close, but Monday's open. And if we keep dropping at Monday's open, which we don't know yet, we don't know until Monday, then maybe this was the real thing. But right now it's kind of suspect because of the people who are selling at this price after institutions had kept prices over the 200-day moving average most of the day. If it's real, we'll just continue down. But if it's not real, we'll probably gap up smartly and take out these highs. On the Friday, when it drops all day, almost always it's going to follow through. So almost always we'll keep on dropping, which is an ominous thing for the market. But if we don't keep on dropping, if we gap up instead, this is a bullish formation. So what's the chances? What's the chance that that's a low? Let's take a look at some other indicators. This can be looked at as a retest of the early October low. If you compare this low to this low, you'll see MACD's higher. And if you look at relative strength, that's higher too. So right now it's a non-confirmation, but until we reverse up, that's not something I would risk money on. This is the Dow Jones Industrial Average, and that didn't hit a low. This is the Dow Jones Trannies, and they did. That's a non-confirmation. It's a Dow theory buy signal, but of course if we keep dropping, that'll get killed. And until we reverse up, once again, you don't know. Well, this is the Fibonacci grid that we had. We stopped right here at the 78.6. We're now back down to the 61.8. Now, it is support. Support doesn't have to hold, but we dropped in a straight line to a support level. And normally when you drop in a straight line to a support level, either you gap under the line or the line wins, meaning the drop won't stick. We're not going to know if we get that drop until Monday's open, but usually a straight line drop to a support level has used up a lot of energy, and it's hard to get more energy to follow through. It's also hard to get more energy when you dropped in a straight line to a rising 200-day moving average. Now it works that way in reverse too. When you have a declining 200-day moving average and you move up to it in a straight line, it tends to run out of steam. And if it doesn't run out of steam immediately, it tends to run out of steam pretty soon thereafter. So here's the first move down that's actually touched and actually slightly undercut that price. There's a place of support. Now support can break, but right now it's a straight line drop to a support area. It indicates again bears need to gap down to keep this going. Now we had this as A and this as B, but let's look at this being B. That's early October. Now I had this chart Thursday night, and for some reason I said C was equal to 618 times A then. That was a mistake, because if that's A, 618 times A is right at Friday's low. So if it is a bottom, at least you've got a wave count, which explains it. If there's no wave count, it probably isn't a bottom. If there is a wave count, you don't know if it's a bottom or not. But it certainly could be. It's a candidate. Let's look at this last drop on a different time frame. Well, it's possible to count this as A and this is B and this is C. And if that's C and you measure A, it's right at the 38.2% level. It's a perfect fit. And if you look at this last wave down, it's 1, 2, 3, 4, 5. And if that's wave 3, wave 1 is 23.6%. Wave 5 is 23.6%. I mean, the fibs are there. So if we gap up, you can explain that this is a complete wave pattern on many different time frames. None of this means a thing if we continue down. But if this is the right count, that's going to hold and we're going to move up. And that we're not going to know until Monday. Now my main count was that we've completed wave green C. We had before, this could be just A of C. If we keep dropping, the July high was probably B of C and C's now over. So if we keep dropping here, that might be B. But for right now, we've stretched this thing about as far as we can without killing the bullish idea. If the bullish idea is right, we should move up right from the open on Monday. And if we drop down instead, it's just hard for me to make things work. So, signals are mixed. You know what that means. Here are the rules. Monday's pattern has the early low regardless of where we open. Friday's all-day decline is challenging my bullish count. Day-long declines on Friday nearly always follow through with Monday's open. But if we gap up instead and don't immediately reverse it, that is bullish in no uncertain terms. Gapping up is possible, but it's by no means assured. Sentiment indicators are bullish. We have a Dow theory bias signal. Other sentiment indicators aren't confirming the retest of the low, like the MEJT and the RSI, and there are some other ones. There's wave balance at the low of day, declining into a 200-day moving average typically meets strong resistance, and the timing of the late break makes it very suspect. So even though Friday was pretty ugly, gapping up cannot be ruled out. And if we gap up, if that happens, we've held a test. But if we gap down strongly instead, it's just hard for me to fit that into my blue count. Doesn't mean we have to drop in a straight line if that happened. But if we gap down, it would suggest there was more downside to come. So I'm anxiously awaiting to see what happens at Monday's open. The most likely thing is a gap open. Until we confirm this, ideally by gapping down low, is just a retest in the bullish pattern. And if we gap up smartly, this could be very strongly bullish. But if not, it's pretty negative even if we don't close down. So let's see how we open on Monday. It's the pattern with the early low, and that's today's call.